Welcome to Hong Kong Brief. The content of the briefing includes HSBC's earnings sink on $3 billion impairment on Chinese bank. Japanese Airlines says baggage car drivers cheated on written exam. China stocks rally on quant fund clampdown, property support. Hong Kong stocks jump to 7-week high on property bets, China market intervention. Hong Kong is over unless China fixes its own economy, Roach says. HSBC's earnings sink on $3 billion impairment on Chinese bank. Bloomberg. HSBC has reported an 80% fall in Q4 2015 profit after taking charges on its holdings in Bank of Communications and from selling its French retail operations. Pre-tax profit fell to $1 billion in the final 3 months of 2015 from $5.05 billion for the same period in 2014. HSBC has struggled in China, one of its key growth markets, due to the ongoing real estate meltdown, and has also seen its returns hampered by interest rate hedges that lost hundreds of millions of dollars. Japanese Airlines says baggage car drivers cheated on written exam. Bloomberg. ANA Holdings Incorporated and Japan Airlines Company have admitted that their subsidiaries allowed workers to cheat on written driving license exams for workers who drive baggage cars and catering vehicles at Tokyo's Haneda Airport. ANA stated that 78 drivers cheated on tests conducted by its subsidiaries between August 2022 and February 2024, with invigilators allowing candidates to look at textbooks during the exams. JAL returned 11 drivers' permits after discovering cheating on tests conducted by its subsidiaries between May 2022 and January 2024. The incidents have increased scrutiny on Japan's aviation industry, which has experienced several high-profile incidents this year. China stocks rally on quant fund clampdown, property support. Bloomberg. Chinese stocks rallied as authorities cracked down on trading by quant funds, in an effort to end the market rout. The Hang Seng China Enterprises Index gained as much as 3.5% to its highest level in 7 weeks. Property developers were among the biggest gainers after banks approved 123.6 billion Chinese yuan, $17 billion, of loans for property projects since January. China's 2 main stock exchanges have vowed to tighten supervision of quantitative trading, particularly leveraged products, which have been blamed for amplifying market volatility. Hong Kong stocks jumped to 7-week high on property bets, China market intervention. South China Morning Post. Hong Kong stocks have risen to a 7-week high amid speculation that the government will remove more curbs to help the struggling property industry. China has also pledged to improve policy transparency, and state-run funds have increased intervention. The Hang Seng Index rose 2.8% to 16,707.73, the highest level since January 2. The Hang Seng Property Index also rose 3.2% to its highest level in over a month. HSBC, which is due to release its earnings report, rose 1.1% to 63 Hong Kong dollars and 35 cents, and its subsidiary Hang Seng Bank rose 3.1% to 84 Hong Kong dollars and 40 cents. China tightens quant trading after freezing big funds accounts. Bloomberg. China's main stock exchanges, the Shanghai and Shenzhen bourses, have pledged to enhance monitoring of quantitative trading, particularly in relation to leveraged products. This follows their freezing of accounts belonging to Ningbo Lingjun Investment Management Partnership, after the fund dumped 2.57 billion Chinese yuan, $357 million, of shares in just a minute. The bourses claimed the trades disrupted normal trading order, and that certain quant trades can amplify market volatilities. Quant hedge funds face China clampdown after rare account freeze. Bloomberg. The Shanghai and Shenzhen bourses have pledged to tighten supervision of quantitative trading after suspending the accounts of Ningbo Lingjun Investment Management Partnership for 3 days. the exchanges will broaden the scope of required reporting of such trades to offshore investors and treat foreign and domestic funds the same. The moves follow a slump in stocks that has lasted 4 years and represent a shift in regulators' attempts to increase scrutiny of quant hedge funds. Is Hong Kong ready for new space race? Aerospace specialists say time is short. South China Morning Post. Hong Kong's first satellite manufacturer, a space technology group, plans to produce its first satellite this year and expects half of its annual production to be sold to the Greater Bay Area. Space aims to contribute to the development of smart cities in the region through its satellite data applications. However, aerospace specialists argue that Hong Kong needs a comprehensive development plan and policies to fully take advantage of the emerging new space industry. Without proper support, the city may miss out on opportunities in the global space economy, which is estimated to be worth over $460 billion. Hong Kong's bankers earn 46% more than Singapore peers. South China Morning Post. Finance and technology professionals are generally better paid in Hong Kong than in Singapore, with investment banking analysts earning 46% more than in Singapore, according to a report from Bloomberg Intelligence. Analysts make an average of $92,149 a year in Hong Kong, compared with $63,305 in Singapore, according to a BI report published Wednesday. Just another Chinese city? 3 reasons you can't write off Hong Kong. South China Morning Post. Hong Kong is not past its prime and is actually at the heart of a newly emerging economic powerhouse with significant growth potential, according to Ronald Chan, founder and chief investment officer of Chartwell Capital. Chan argues that Hong Kong's stock market ranks 6th in the Asia-Pacific by capitalization and 9th globally, ahead of more established financial hubs such as London. He highlights the city's low debt level and its central role in the Greater Bay Area as factors that will contribute to its ongoing success. ESR owners weighs options for $5 billion logistics firm. Bloomberg. Some of ESR Group's largest shareholders are considering options for the Asian warehouse developer, including taking the company private, after its shares experienced significant declines. The company has also attracted preliminary interest from potential buyers looking at the company or some of its major assets. ESR's shares have fallen almost 70% from their peak in early 2021, while Hong Kong's benchmark Hang Seng Index has dropped about 45% over the same period. ESR manages real estate assets worth about $150 billion in various markets, including China, Japan, South Korea, Australia, Singapore, India, and New Zealand. Hong Kong's population edges up to 7.5 million, second year of post-COVID growth. Yahoo! Hong Kong's population increased by 0.4% to 7.5 million in 2023, marking the second year of growth since the pandemic. The rise of 30,500 people comes as the city looks to revive its economy and international appeal following 3 years of strict COVID-19 measures and political unrest. The government attributed the increase to returning residents and people on residential schemes, as well as the admission of mainland and overseas persons through various schemes. Meanwhile, China's population fell for a second consecutive year in 2023 due to a record low birth rate and COVID-19 deaths. Preparing for war, social unrest, or a new pandemic? Chinese companies are raising militias like it's the 1970s. CNN. At least 16 major Chinese firms have set up their own volunteer armies called the People's Armed Forces Departments, according to state media reports. Composed of civilians who retain their regular jobs, these units act as a reserve and auxiliary force for China's military and are available for missions ranging from responding to natural disasters to supporting the armed forces in times of war. The establishment of these corporate brigades highlights China's growing concerns about potential conflict abroad and social unrest at home as the economy stumbles, analysts say. They also reflect President Xi Jinping's efforts to tighten Communist Party control over society, including the corporate sector. Hedge fund Millennium's Asia Equities head Kotecha set to leave. Bloomberg. Viksh Kotecha, head of Asia Equities at hedge fund firm Millennium Management, is set to leave the company after 4 years. Kotecha, who joined the firm from UBS Group in 2020, is one of the highest-profile bankers to switch to Asia's hedge fund industry in recent years. His departure comes amidst fierce competition for talent in the multi-strategy hedge fund sector. Millennium has been aggressively hiring in Asia and has seen several other high-profile departures recently, including former co-CEO Jonathan Sheung, who is starting his own firm, and portfolio managers Sayan Ghosh and Nilesh Banerjee, who moved to North Rock Capital Management. Why international defender chose Hong Kong club over mainland China move? South China Morning Post. Hong Kong footballer Li Nai-hoi has turned down a return to mainland Chinese football in order to stay in Hong Kong and enhance his international prospects. Li, who recently transferred to Hong Kong Premier League leaders Li Man, explained that he felt isolated during his previous stint in mainland China and preferred the more comfortable surroundings of Hong Kong. Li's move to Li Man was welcomed by Hong Kong's head coach Jorn Anderson, who stated that the more professional environment would be good for Li, but warned that he would face competition for a place in the team. Hello, everyone. It's your favorite observer from the 6 Degrees world, Dr. Six here, bringing you the latest news from around the globe. Today, we have quite a mix of stories, from the struggles of HSBC in China to the rise of volunteer armies in Chinese companies. So, let's dive in. First up, HSBC reported a significant drop in Q4 2015 profit due to impairment charges on its holdings in a Chinese bank and from selling its French retail operations. It seems like HSBC has been facing challenges in China, one of its key growth markets, with the ongoing real estate meltdown and losses from interest rate hedges. Looks like HSBC needs to regroup and come up with a new strategy to navigate the Chinese market. Speaking of China, Chinese stocks rallied as authorities cracked down on trading by quant funds. The Hang Seng China Enterprises Index saw a significant jump, and property developers were among the biggest gainers. It seems like China is taking steps to stabilize its market and prevent further volatility. Let's hope these measures work and bring some stability to the Chinese stock market. Moving on to Hong Kong, the city's stocks jumped to a 7-week high amid speculation that the government will remove more curbs to help the struggling property industry. The Hang Seng Index and the Hang Seng Property Index both saw significant gains. It's good news for Hong Kong's economy, and hopefully, these measures will help revive the property market and bring some much-needed growth. But not everyone is optimistic about Hong Kong's future. Former chair of Morgan Stanley Asia, Stephen Roach, believes that China needs to fix its own economy and allow Hong Kong to run itself if it wants a better future for the financial hub. Roach's comments have sparked debates, with some prominent figures in Hong Kong disagreeing with his pessimistic view. It's an interesting discussion, and only time will tell what lies ahead for Hong Kong. Now, let's talk about something out of this world. Hong Kong's first satellite manufacturer, a space technology group, plans to produce its first satellite this year and aims to contribute to the development of smart cities in the Greater Bay Area. However, aerospace specialists argue that Hong Kong needs a comprehensive development plan and policies to fully take advantage of the emerging new space industry. Without proper support, Hong Kong may miss out on opportunities in the global space economy. So, let's hope Hong Kong reaches for the stars and makes its mark in the space industry. And finally, let's not forget about the people of Hong Kong. According to a report, finance and technology professionals in Hong Kong are generally better paid than their counterparts in Singapore. Investment banking analysts in Hong Kong earn 46% more than in Singapore. Looks like the financial industry in Hong Kong still holds its ground and remains a lucrative field. That's all the news for today, folks. It's been quite a mix of stories, from the struggles of HSBC in China to the rise of volunteer armies in Chinese companies. As always, I'm eager to hear your thoughts. So, what do you think about these news stories? Do you have any questions or opinions? Let's hear it. Thank you for tuning in. The content above showcases the latest briefing reports and analytical synopses, thoughtfully curated by the 6Do team. These insights stem from a wide array of reputable media outlets, think tanks, government sources, and specialized experts worldwide. We encourage you to explore these sources for a comprehensive perspective. Keep in mind that while the content may not always align with the official standpoint of 6Do Brief, it's not meant to be taken as absolute directives for decision-making. Comprising seasoned media professionals, learned scholars, and accomplished scientists, the 6Do team embodies a trailblazing, fully independent media entity. To customize 6Do Brief to meet your professional needs, you have the option to subscribe to a diverse array of briefings on our website, 6dobrief.com. Regardless of your location, you can conveniently receive 6Do Brief via email.